Now, people tend to have risk thresholds. I think one of the things
Yeah.
I've seen is a situation where your portfolio is being divided based off risk. I see people who would do a 50% low risk of their entire portfolio. So when they're trying to set up what their portfolio should look like, 50% low risk, 30% medium risk, and then 20% high risk. Now, the reason being that low risk is your default setting, default alive. It
Yeah.
comes with much lesser returns, but still,
Mhm.
you know that that's where you're grounded.
Hello, investors. Good afternoon, good morning, good evening from wherever it is that you are joining us from. Welcome to another episode where we are going to be talking about all things investing and how it is that you can do it correctly. Today, we're going to be talking about a very special initiative, I'd like to call it, about how it is that we have started to evolve and improve on how it is that we're able to invest in, especially for us, those of us that are here in Africa. It's called equity investing. It brings up a very special opportunity for a lot of us that work in Africa, live in Africa, or even those of you that live in the diaspora. Equity investing has, with a lot of people, being taken maybe with a pinch of salt, would like to call it. But again, it has also become that tool that some people are using, they're leveraging, and they are cashing out. It would be unfair if we say that there is parity in the investing space where we are not able to come and tell you so much more about how equity investing works or who it is that you should turn to when you want to start doing equity investing. And today I have a very special guest with me who's going to be telling you exactly how it works because this is what they are doing across the African market. His name is Jude and he is the co-founder of GetEquity. Hi Jude, how are you today?
Hi, Loretta. Thank you for having me. It's a sunny Sunday. It's a sunny Saturday, actually. Thank God.
Mm-hmm.
It's more true this week. So I've been indoors for the most part. Maybe I get to go out today. How are you doing?
Oh, really? I'm fine. I'm fine. It's been really busy, but I mean, you know how it is. End of month, going up and down for different things. I mean, people like you are lucky because a lot of your work can be done in one place.
That's
But I
what I love
mean,
about. That's what I love about it, to be
yes,
honest.
yes, and
Uh,
I think that you were recently at a exhibition of sorts.
yeah.
How was that?
Um,
What spurred that to go on?
so I think it's more of the Nigerian what will I call it? The American I think there's a word that's called Vice Secretary of the Treasury. I think Deputy
Okay.
Secretary of the Treasury. So
Deputy Secretary, yes.
basically, their own version of a Minister of Finance was in the country, and turns out that he's Nigerian as well, of Nigerian origins. So he was in the country for I think about a week or something, and a couple of investors of mine also reached out to me that they wanted to do give or take more of like a an exhibition of startups that are doing, I guess, really good things across Africa. And so I got an invite there, and it was quite interesting. I mean, we talked about the African investment space. We talked about
Mhm.
him being a diaspora and then also, looking to contribute back home into investing in different businesses and how he's able to do that as well. So it was quite fun for me, to be honest. I tend to shy away from things like that unless I really need to be there. But this was quite fun.
Interesting. I mean, I can only imagine that. I mean, what you really had a lot of discussions around it. But before we go too, I mean, talk too much about that. Tell us here today. I mean, just introduce what Get Equity is. introduce what it is that you're trying to achieve, so that anybody who's watching this can get an understanding of what it was that you even went to showcase with them and say, okay, I mean, what's so special?
So GetEquity in itself is an investment marketplace. GetEquity is an investment marketplace for different sophisticated investors to have access to different investment products across multiple asset classes. It could be in equities, it could be in real estate, it could be in commodities, etc. You have a one-stop place where you want to be able to invest in any of these deals, and they are typically provided by licensed and regulated investment providers as well across the globe. It could be across Africa. We're starting to see situations where even some investment providers from outside of Africa and like Southeast Asia and all of that. So it's let me say in one sentence, the place where you can go and see different investment products or different investment products that normally as an individual, or if you weren't a HNI, you wouldn't have had access to. It could be either in private equity space or even in real estate, where for you to invest in maybe one real estate building might cost 100 million naira. But in this instance now, you have what is called fractionalized real estate, where you can just invest in certain bits of it, maybe a minimum investment of 1 million, and then it aggregates from maybe 100 people to meet that 100 million naira threshold. That's exactly what we do at GetEquity. It's saying you shouldn't wait till you are a HNI before you have access to these sort of investment deals that are only accessible to certain HNI groups, mainly because of threshold, because you don't meet their minimum investment threshold and all of that.
Right. I mean, so that's so for people who are watching and don't understand it, I mean, simpler terms is you think about having a piece of cake. And I say this because people have asked me, and when I give them explanations like this, they're like, break it down. Give me a practical example. So I always like to use the piece of cake or a pizza as an example. Okay. And I say, if you couldn't afford to buy a pizza or a cake by yourself, you get 5-6 friends to come and buy one, and then everybody takes a share. So What you are doing is that you're now taking different types of cakes, and you are allowing everybody to be able to get a piece of it. So it's kind of like owning a piece of the city or owning a piece of the pie, as the case may be, irrelevant of what you mean, the fact that you're not a HNI.
Exactly.
So if you were then to explain why it's important. So we all know that, okay, yes, there's the explanation of, you may not be able to afford it. But then people then say, but if I can't afford it, then I don't afford it, right? Then there's no inclusion for them. So yes. So if you were to explain to a 5-year-old, for example, why it is better for the 5-year-old to think about getting little pieces in multiple options, how would you explain that?
Okay, so I mean, for me, let me use your cake analogy, but then this time I'm going to use pastries in general, right?
Okay.
I might, or maybe a baby, anyone, I might decide that I want to go. I like pastries, and I want to have, as many pastries as I can, but my funds are limited. Maybe I have only 1,000 naira. And I want to be able to have access to, or I want to be able to taste out different things. Maybe we went to a GTB food fair, for example, and I went with like 5 of my friends. Now, instead of I have like maybe 5,000 naira with me, but instead of me to my 5,000 naira can maybe only afford one thing. But that's not the only thing I want to taste, right? It's a fair. I want to taste as many things as I can. I want to have as many experiences as I can. So instead, I go with about 6 friends, and we say, okay, now the minimum food that we can buy, or the minimum pastries or whatever that we can buy, is 5,000, right? And we all have 5,000 with us. So why don't we do it this way, so that we all have access to all of these experiences? Each one of us would buy a different thing
Yeah.
of 5,000, and then we all come share it within ourselves. Now that way, instead of me only having had access to maybe a cake, now in this instance, we can have bought cakes, candies, ice cream, all of the different things that we want to have, and then we just share it within ourselves. And in that way,
Right.
to be honest, the experience is much better, because if you go to a fair, I mean, you want to be able to have access to multiple things, but
Sure.
you have limited, what they call it, you have limited funds. But now, being able to do this, where you're able to have with different people and it's shared, the experience is much greater, and that's basically it. But now, in this instance, think of it as the experience in investing being wealth generation, and also it helps with diversifying risk, in the sense that you might want to have be able to invest in different. I mean, any investment professional will tell you the best way to manage risk is to diversify your portfolio. So in this particular instance, right, instead of you taking maybe all the funds you had to meet the minimum threshold for one investment, you can then have access to reduced investment to diversify your portfolio. In that instance, if one side goes down, I mean, and another side goes up, it helps you balance out your entire portfolio.
Awesome. I totally agree that you have done justice to, I mean, explaining diversification to a 5-year-old, because that's literally what you've just explained, and you've even put in the word. So, like, seriously. So let's go back to something that you said earlier when you were defining the type of investors that you're trying to serve. You said sophisticated investors. Now, that term alone may seem to some people like we're being choosy, right? So I've seen instances where people say, "Oh, when you say am I a sophisticated investor? You know, what does a sophisticated investor mean? Does this mean that I have to have some credibility or some license or something and stuff like that?" Can you please just also explain that before we then go into all the other things, just so that we know that in the beginning we have resolved any blockages that may come and make people feel like they are excluded, because
no problem.
That's actually not the case.
The thing with legalities is that you or regulators, and let me just call the legal profession, is they tend to use quite a bit of terminologies. So in this instance, a sophisticated investor just basically means you've had experience investing in something before. It could be investing in stocks, it could be investing in bonds, it could be buying T-bills, investing in Nigerian Stock Exchange, all of that. You understand investing and you understand the risk of investing. That there's some type of investments that the risk is higher, there's some type of investment that the risk is lower, which also gives lower returns. That basically makes you a sophisticated investor. There's also different levels. There's investment professionals as well. And investment professionals basically means you work in the investment space. Then there's now the much higher one, which is accredited investor. And for an accredited investor, those ones tend to be a lot more official, in the sense that you have a certain you earn up to a certain amount yearly, or you are worth, I think in this instance, it's about 100 million naira or something for you to become, for you to be known as an accredited investor.
Accredited investor.
Exactly.
Oh, that's
But from a
interesting.
sophisticated investor, it basically means you have investment experience.
Okay. I mean, I honestly didn't even know that that it was that the cap for accredited investors to identify that was actually 100 million. So that's very interesting. Okay, so would you say that there are many accredited investors in Nigeria?
So I would say in this instance, right, and one of the issues with this actually is the fact that um, we have HNIs,
Yeah.
but I don't think we have that much of accredited investors, in the
Okay.
sense that a lot of people don't realize the what will I call it now? A lot of people don't realize this from a more official standpoint. Many people see certain types of investing as, oh, this is for the billionaires, all of that, right?
Mhm. Mhm.
Meanwhile, you could be an accredited investor based off your earnings per year.
Right.
I know that a lot of asset managers tend to follow with trying to, convince people and trying to get a lot more Nigerians interested in that space. I think
Yeah.
for us in many parts of Africa, um,
Right.
formal investing, let me put it that way, is not something that
Yeah.
we're used to yet, right?
Uh-huh.
It's what's the word I'll call it? It's something that we're still getting into.
Used to.
Yeah, it's something we're still getting used to. But um then from the HNI play, or the HNI side of things, it's the fact that many HNIs yet are now starting to see other aspects of investing. I think before a lot of HNIs were just more on what's the word called now? We're just more on investing in certain oil and gas deals, or at best only real estate, and not
Mhm.
necessarily diversifying
Yeah.
across a multitude of asset classes.
Okay. I mean, yeah, I tend to agree with you, but I mean that's not even what we want to talk about today. But so I mean, I think on the whole, that just shows us that this is still something new. This is still something that Africans in general are trying to get to know and trying to understand. And I'm really hoping that at the end of today's session, that at least we would be able to say we have contributed to helping that happen. So,
Yeah.
um, the next question that I would like us to talk about, and this is because I have like a bunch of questions people asked over time. So the question then becomes, how do people know what options to invest in? So somebody comes in, yes, they have had some form of some experience, of investing, but they're not yet confident. And then they're seeing all the listings. And I say this because somebody actually said, oh, you people that encourage investments, you guys write the best details about all of your options. So how do I, who cannot understand which is which out of all the things that you've written out, say these are the ones that I want to choose? I mean, and this basically comes to the question of, how does someone who is looking to invest with equities actually pick and choose options that go into their portfolio? I mean, I know that you have done some investing, so I'm hoping that you can talk about this from your personal experience as well as your professional experience, considering that you manage the GetEquity platform.
So one major thing I've seen that people tend to invest from a um, psychological place or a sentimental place first, and
Mhm.
then there are those who invest from a more financial place, but also tied with sentiment. Sentiment drives a lot of investments, actually.
Yeah.
Um, aside and it drives a lot more in the more riskier side of things. So aside maybe money markets, or investing in maybe a dollar fund or euro bond somewhere, there's also the aspect of,
Mhm.
when it comes to equities, it's people want to have a certain type of connection to that company. It's either, oh, this company is doing something that I wanted to do before, or this company is fighting something that I've experienced, or they're trying to make my life easier by money payment, and money transfer is something that
Yeah.
I've had an issue with over time. So for people who are trying to get or diversify how their portfolio would be. In some instances, one of the things that I tend to advise is first, um, always have someone in your best interest. So someone that has your best interest, who's a lot more financial savvy. And that's where now we're starting to see robo financial companies come in. And robo financial
Yeah.
companies help you to get the best out of a bucket of diversified portfolios. So
Yeah.
always do that in getting your best interest. But I've noticed that sentiments would always take
Come into play.
yes, it's always come into play. And to be honest, I don't think I've gone, and this is from me investing in the early stages in equities market. I
Yeah.
don't think I have gone wrong with backing a founder before. So for me,
Okay.
I try to find out more about the founder, what they do, what they've done prior, their experience, and the type of person that they are. Obviously, I know that this is something that might not be scalable in the long run when you're starting to
Yeah.
invest with like a fund or something. But because this is my own personal money, um,
Mm-hmm.
I have a certain bit of personal sentiment to even the company that I'm going to be investing in, because I'm not just investing
Okay.
my money, but I'm also investing my time, my
Yeah.
efforts.
Yeah.
In some instances, if there are situations where I see that, or I see certain synergies with other potential companies, it's something that I then would even reach out to the companies and do an intro and all of that. So for
Okay.
that, well, for me, it's
Yeah.
I tend to have a lot more personal connection with the company and those who are in charge of that company.
Okay. Yeah. So that, I mean, that's very insightful. Because essentially what you said is that people, I mean, that's your own form of due diligence into
Exactly.
what it is that you're investing in. For you, what's key is you understanding and knowing a bit more about the founder. And now I understand. I mean, I understand the dynamics of why you broke down your registration to include the team, but then a more, explicit description of the founder.
Yeah.
I remember doing that, and I was like, okay, so if I'm describing the team, then why am I going into all the details about the founder without going into details about the team? So I mean that makes sense, because considering that it's kind of like an idea, it's something that they're still
Exactly.
working
It,
through.
it,
It's
it,
an
it all
opportunity.
majorly rests
The
on the
founder
founder.
will always be key.
Yes, in that stage, it
Yes.
majorly rests on the founder. It's still in the think of the business as still in the birthing stage.
Infancy.
Let's call it exactly. In the first like
Yes.
9 months, you need
Mm.
that care
The
of
mother.
that founder.
That
Exactly.
connection with the mother.
Exactly. So for that to grow and get to a
Yes.
certain
Oh,
level.
nice.
Now, when it gets to a growth stage, you could say, oh, you might want to have maybe that founder has then evolved into from just an idea founder into being an actual business. We need to grow this into
Yeah.
a $1 billion business, etc. But in that infancy
Mhm.
stage, it rests solely on the founder, the type of person the founder is, and all of that. And in my own opinion,
Yeah.
that's still is one of the best ways to invest in companies.
Yeah. And I mean that, as I said, that's very insightful. I think that people would be able to think about that, because sometimes people are wondering, what due diligence am I now doing? Because I mean, I'm thinking about equities of the company, but how do I even really know? So yes, this insight about knowing the founder and getting to understand how the founder thinks and sees up the idea is really good. Thank you. So my next question would then be, um, for you as GetEquity, you're looking to go across Africa. Um, the question then would then become, why are you going across Africa? Why are you not also going to get some of these global resources or opportunities and put them on so that Africans can invest. What was your driving force for going that route?
Okay, so for us, I think I'll call it this way: we're a bridge, right? Africa's typically where let me say, the supply is. The demand is usually from the diaspora. There's been an existing bridge between Africa and the African diaspora for the longest, in the sense that, again, when you look at things from a sentimental value, people still
Yeah.
want to have certain touches with their roots. That's on the one hand. Then, on the other hand, from a financial point of view, money, or let me say, larger growth comes more from developing ecosystems, and majorly because if you look at this from a financial purview, it's more risky, but the returns pay more. So an example is, if you are trying to invest in an Uber, for example, an Uber right
Yeah.
now is worth let me say Uber is already listed on the stock exchange. So let me say, if you're
Yes.
trying to invest in a Stripe right now, a Stripe is worth about
Okay.
50 billion, right? In the
Mm,
next, let me say, 5 years, what are the odds,
yeah.
or what are the chances that Stripe's current valuation at 50 billion would give you maybe a 3x, that it would be worth 150?
Okay.
I don't know. But
Yeah.
if we're coming down to Africa to invest in, let's say, the new, let me use an example of a company now, Lemfi. Now, Lemfi, as at 3 years ago, was worth maybe, I think they were just getting out of YC, and they were worth maybe $10 million. Now, in the next 3 years, they've been able to get and grow much faster because they're still in an earlier stage. At an earlier stage, think of it like when you get into puberty, and then it's like you just have this growth sprouts, right?
Mm-hmm.
It's much harder for a 40-year-old person to experience growth than
Yeah.
a like 18-year-old, for example. The growth
True.
changes are usually faster at a shorter time. And so
Yeah.
it's just how it is. But then again, it's riskier,
Yeah.
but returns pay out more. And that's why um, a lot of Africans, I think, we are ideally, we understand risk quite a lot, ideally.
Mm.
And so from the African diaspora, and in fact, it still is the fact that money flowing in from the diaspora compared to
Mm-hmm.
like their economies is still, the money that's coming into Africa is still just a tiny percentage. I mean, the entire
Yeah.
money that's coming into Africa from the US is about
Yeah.
1% of the US economy.
Oh, wow.
And so it's still just a tiny tidbit, right? So
Yeah.
even in those sort of instances, what we want to be is that bridge towards supply and demand. And we know that a lot of the supply is here in Africa with African businesses and in most developing ecosystems. And then the demand is coming from developed ecosystems. But again, it's like a chicken and egg problem. You need to be able to know, is your focus. Are you going to
Yeah.
focus on supply, and then supply will bring demand? Or are you going to focus on
Yeah.
getting demand, and then from demand you bring supply? And
Bring
so we've
supply.
chosen to go this route with the supply part first, because one thing that we've seen from people is, I want to have a place that is, I don't have to do so much research, headache, and all of that. It is brought to,
Mm.
and then I just have to make the decision.
Right. So I'm also presuming that, just understanding the fact that, especially in Africa, first mover advantage would almost always win, or would almost always give you an edge. Reason being that you have a lot more time and a lot more space to be able to get people used to you. People start to know you because you are almost like the first person that's talking to them about it. They are
Yeah,
listening to you, and then they are thinking, okay, so if I want to start, this is where I start from. But somebody who's like new will then be looking at, okay, how do I get in? Unless maybe you're coming in with your own existing clientele or your own existing, which rarely is the case, because we're talking African equity here, where you almost never know everyone that has something to offer on the African continent, because there's always so many ideas, even though they
Yeah.
may seem similar. Okay, so in light of that, would you then say that the African ecosystem as a whole, in terms of everything we have in Africa, would you then say that the African ecosystem is something that people who want to truly grow wealth, should actually look to, as against going to look for more global opportunities? And I'll explain kind of what I'm getting at here. We've seen people who say, "Oh, I'd rather go and invest abroad because their money, the exchange rate works better," right? We've also seen people who are saying that the African businesses and stuff like that they're not yet as ripe. However, just like what you explained, there is the opportunity for when they are then going to become ripe, that they would, explode
Exactly.
in bigger ways, maybe times 5, times 10, and stuff like that. Whereas those that are already established would only maybe have a times 2, essentially. So yes, the
Exactly.
exchange rates and all of that may be stronger, but the potential for growth is lower. How would you explain that as relates to how people build wealth? So, because there's investing to make money, and then there's investing to like literally build wealth. I like to
Exactly.
differentiate them. Which is kind of like why I'm asking this. How would you explain using equities, especially in Africa, to build wealth? What would be a few strategies, a few tips that people who are looking to invest and are watching this can then say, okay, I can go away from this knowing that this is one way I can use African equities to build my wealth?
Yeah. So, the very first thing I'll start with is now people tend to have risk thresholds. I think one of the things I've seen is a situation where your portfolio is being divided based off risk. I see people who would do a 50% low risk of their entire portfolio. So when they're trying to set up what their portfolio should look like, 50% low risk, 30% medium risk, and then 20% high risk. Now, the reason being that low risk is your default setting, default alive. It comes with much lesser returns, but still, that's where you're grounded. To say, or investors say, yes, I would just much rather prefer to have this abroad than in Nigeria. And the honest truth is, nothing stops you from doing both. Again, right, one thing that we had, or one of the biggest issues had always been, because there's little funds and then there's a lot more things to invest, so threshold access. But now that's what we're trying to tell you is nothing stops you from doing both. Now, because the threshold is reduced on this particular aspect, you could have the best of both worlds. You could decide to say, yes, I want to go the less risky route, but again, try out a more risky route as well. But instead, now, because of a reduced threshold, I'm able to have access to both markets. And this is what we have done as GetEquity from, in starting out with the equities market. It was a thing of, there's the much earlier companies, there's the much later companies, depending on whichever one catches your fancy. There are those in the US, there are those that operate in Africa alone. And then now we've moved this into other asset classes as well, saying you could decide to have maybe fixed income for a certain part of your portfolio, and then decide to invest in certain equities as well. That's the entire way you create a diversified portfolio to grow wealth in the long run. Again, because the difference between growing wealth and making money, like you said, is for the long run. It's what would it look like? What would this look like 20 years from now? Those risky businesses might some of those risky businesses might end up dying. But then again, some of those risky businesses might be the next Flutterwave. I'm pretty
Yeah.
sure some people who had invested in Flutterwave when they were worth maybe $20 million
Mhm.
right now are
Yeah.
everyone is happy with themselves awaiting an IPO.
Uh-huh.
So it's a pretty similar thing, right? I would say
Mhm.
you should be able to have the best of both worlds. I don't think, in my personal opinion, I don't think there should be the need to choose either or.
This
And
or that. Yeah.
exactly, and it's what our entire company is built on. It's the fact that in the investment space, you shouldn't have to do either ors. You should be able to have access to everything, and that's the concept
Everything.
of democratizing access. It's saying
True.
you should be able to have that access
Mhm.
at your own, at whatever level you are in.
Awesome. I totally agree, and I like how you explained it, inclusive of what your preference for a formula is and what you've seen people do. Because when people think about balance, sometimes people think, okay, I want to create balance. I need to go equal. I need to go equally across the board. You don't necessarily have to do that. You can just take things in different fractions. So yes, I mean that's absolutely thing. So the next question would then become, um, how do people actually create wealth? What I mean, people have heard us talk about dividends, and they've heard about talking about income generation, and stuff like that. But um, from your professional perspective, right? How have you seen? I mean, what's your experience personally with dividends as a whole, and what would you say makes you feel like dividends are secure,
So,
if you
um,
think that they're secure?
I mean, I remember having this conversation with my father actually. Obviously, my father was one of or we invested in the Nigerian stock markets,
Okay.
money markets at that time, etc.
Uh-huh.
And I mean, a lot of people from that period are used to the idea of dividends. Now, you
Hmm.
fast forward into the new venture capital type of world where you're investing in the long run. Not the companies don't pay dividends, but it's
Hmm.
until that company exits or gets acquired or hits an IPO that you now sell your shares.
Hmm.
So I mean, we had that back and forth on different angles of that kind of investing. I think,
Okay.
I mean, there's nobody who would say no to dividends.
Hmm.
But I think in also some instances, dividends, I think, and this is majorly because of my own experience. I think dividends are a plus, not necessarily a given. Um, Again, and I think
Okay.
I'll put dividend giving businesses as within that. I might be wrong, but I think I'll put them as within that 30% not so risky type of things. I
Okay.
mean, they're not
All right.
necessarily they're not necessarily fixed income. I'm not sure
Yeah.
if I'll call them fixed income, but
Yeah.
they are within that 30% risky aspect of things.
Mhm.
The more 20% risk is like a shooting star. It's either we go all the way or nothing. There's no let's stop and talk about dividends and everything. I like to see dividends as a plus and not necessarily something that I would expect every company I invest in or every investment to have to pay that out to me. In fact, I don't think any company I'm invested in is ever going to pay me dividends until um,
um,
out of them. But I've seen situations where dividend deals can be structured in other asset classes, for example, like real estate, or
yeah.
I think real estate is actually very perfect for dividends, and it's something that I would consider. I mean, I'll definitely put as part of my own 30%. I find that very very interesting, actually.
Nice. And I pity I like the fact that you referenced that all of this started from as far back as your father, because if we're being honest, they're the ones who are kind of like teaching us that if I could invest and you are still earning or enjoying the benefits of my investment, you should also be able to do that for your kids. I mean, I've had discussions with various people who are saying that they're still enjoying the efforts of their parents who were investing,
Yeah,
and every quarter that they are still getting some check, that some announcement notification that they've been paid, and then it's just like free money that they can get, whereas they know
exactly.
that their wealth is still growing because the value of the things that their parents invested in were
It's
still
still there.
appreciating. And
Exactly.
to be honest, when we think about businesses, yes, businesses can only pay you when they are truly making money. So if you think about equities or investing in startups and stuff like that, yes, they can be risky because you're going to have to wait that long term.
Hmm.
But the beauty of equity is that you can wait long term, especially equity that pays you a dividend. Is that you can wait, you can be in long term, but you are earning something off of it.
Yes.
And to be honest, that was literally what made me us to do the whole dominoes and say we want to be able to break property into thing and then come and list it even on your platform, because we said we want to be able to help people to get in at the type of ratios that you are able to provide. I mean, so
Hmm.
with you, you're able to help us break it down to as little as $10 per share, right? With us, we were not able to deal with that volume. So people who then tend to learn or understand how it works can be happier because yes, you're having to tie your money long term, but at least you're earning something. And
Exactly.
all of this is what contributes to the whole concept of building wealth. Because when people say, so how do I get wealthy on these little dividends that you're paying me? I say that's not what's making you wealthy. The dividends are meant to keep you motivated that this thing is working and it is still appreciated in value, so that the real wealth is in the product that you've left your money into.
Yeah, I think the actual word is just whole body. And while
Exactly, right?
your
Whole body.
actual investment is that's pretty
The
much it. That's pretty much
appreciation.
the whole body.
Yes. Because truth of the matter is that everybody who gets that dividend goes into your account. Unless you are so disciplined where once it hits your account, you're taking it into another investment or into another savings or anything, chances are that you would spend that dividend,
Pretty much.
So exactly, because on a good day, you are coming in with a limited funding budget anyways, so your investment is going to already be a bit small, so you're just going to
Exactly.
take that money and it's going to become a reward for you. So that term whole body generally explains it. But for people who are then going to do it, I mean, them being able to hold body with that dividend and keep their investment growing then tends to work long term, and then they see the value of it. Now, let's come back a little bit to your platform and get equity, and how you're working and all of that. So, how do people who are then investing in equities expect, or what would they expect when they want to exit from something? I know because everything is still kind of new, we are not yet at the best position to say that exits may be as fluid as, oh, I'm just pulling out, and all of that. But what exists currently, and what do you expect to happen in the next 3, 5, 10 years as relates to the equity marketplace, how people are going to be able to go into the marketplace, exit the marketplace, or even just liquidate parts of their investment. I mean, what are your insights or thoughts about where that is going?
So basically, I think for me, in the more equity marketplace type of thing, I think secondaries is something that is still relatively new, but it's something that we're starting to see as is going to be the key to not just equities, but investments in general, right?
Mm-hmm.
Now we've seen situations where even funds, larger funds that have spent time investing in businesses over time, are
Yeah.
now trying to exit out, even on partial exits and all of that. I mean, fast forward 3 years ago, if you were trying to get if you're trying to get access into um, you're trying to get secondaries from a fund that had already invested in a business,
Mm-hmm.
it was headache. Now those funds are looking to sell now because what is happening is the
Okay.
fact that at the end of the day, right, there's limited cash available. The supply is much I think the demand is much larger than the supply. It's the demand for cash from different companies versus the amount of cash that's limited and available to invest in these different companies. So what I mean, a lot of managers, fund managers, or whatsoever would be looking at is yes, we've seen maybe a 10x increase in our investment in this company. We can be
Mm-hmm.
fine with that and then try to recycle that in another company again, etc., etc. Because again, the best way to generate wealth is through recycled exits. That's even one of the best ways
Mm-hmm.
to grow an ecosystem, right? It's
Mm-hmm.
through recycled
Mm-hmm.
exits until money has come back into my bank account that I can see and I can
Yes.
spend. If you keep
Mm-hmm.
telling me that, oh, this investment that you made is now worth 10 times, and until that thing converts into cash
Cash that you can redeem.
that I can redeem, it's just there,
Yeah.
right? And so um, we would start to see an evolution of liquidity makers or liquidity providers, especially on
Okay.
exits like this. Because now, for a fund where, like we said, maybe a fund was trying to, they made 10x, right? And they need liquidity
Mm-hmm.
now. They would be willing to sell for 80% of that, right? That liquidity
True.
provider's job is to buy from them and hold until someone else wants to buy. And that someone else wanting to buy would buy the 100% in general. So you've made your 20% just from you providing
Holding.
cash for that deal and just
Mm-hmm.
holding. Exactly. So this I mean, right now we're still in the early stages in this part of the world
Mm-hmm.
where these things become other methods of financing. I know a lot of financial providers already do things like this in like oil and gas deals and whatever, but they will soon start to look at the equities market as well as a reasonable place to make this sort of plays, especially when unlike oil and gas deals that tends to be, a lot more physical and takes a bit more time. In the equities market, these things are already what will I call it now? It's already digitized. So this is something that this liquidity provision could be as fast as, in fact, much faster than normal as well.
Yes. And that's absolutely true because people then think, oh, I buy a property today and I then say I want to sell it. I have to look for someone who's willing to pay the price that I'm asking for or very close to that price. Consider that real
Exactly.
estate is quite capital intensive. You may wait on the market for quite a bit. However, if you had taken a fraction of the total cost and you had put it into the equity of that property, you could say, okay, I want to sell half. And then you come and you say you want to sell another little piece of something else without totally being removed from all of that. And then you
Exactly.
can raise the money. So looking at somebody who has maybe 100 million and the person says, I'm putting 10 into real estate, I'm putting another 10 into a Greek, and I'm putting another, this, they just break the money across the different equities. If at any point in time you need 20 million, you can go and sell 5 billion of real estate, 5 million of a Greek, 5 million of this, and you're still not out of the market. So
Exactly.
I'm hoping that people who are watching this are understanding ways that it is that they're enjoying flexibility as well as a whole lot more leverage by going into, exploring equity investing. Also, because you don't have to do any work, literally, after you've invested. The work that you have to do is your due diligence, and then watching the markets. which brings us to our almost last question. Um, Considering that you are looking in the market, you're always looking in the market for things, I mean, equities that you can work with, equities you can bring on board of your platform, considering your expansion across different African countries and stuff like that. What would you say the market is like? And where are two places that you go to watch the market, to understudy the market? Because as we're doing these sessions, I like for people to be able to also understand how they can do them for themselves. So even though they're
Mhm.
coming and they're saying, oh, where do I invest? What do I invest in? What's good? They can also go and check for themselves after somebody has said these are what are good, because that's all part of the due diligence process. So what do you think the market is like currently, 2023, September into October, and where are two places that you tend to look when you're looking to understand what the market is doing?
In my opinion, I think I'm beginning to see a bounce back in the market, especially from the equity side of things. Stock markets is beginning to bounce back. We've had a lot more IPOs now. I think it's going to correct all the way into maybe 2025 before we see a much more stable correction. In terms of like where I get my news from or where I get my data from, I think I'll first start with my company, GetEquity. I mean, we operate or we have a team of researchers whose jobs is to make sure that we find
Yeah.
things like this. Um,
Mm-hmm.
so that aside, then there's Twitter. I mean, Twitter for me is Twitter for me is a market. Let me just call it an online market.
Yes.
You will get stories on any and everything if you know the right place to look. And so I tend to follow certain people who are, in the equity space, in the VC space, also in the real estate space. Just, on day to day, just consuming content on what they're
Mm-hmm.
talking about. Um, Following through with that, you'll be able to spot certain trends that you can then go and maybe do your own further research on, etc.
True. Okay, yes, I mean that's absolutely true. And about Twitter, like Twitter is wild because you can get everything you're looking for. And I tell people, I say, yes, it may seem callous sometimes when they break down certain things, but I would really rather be there where somebody is giving absolute truth about the different details and you just go and do your due diligence in full somewhere else. I mean, than be getting sugar coated information, because
Exactly.
on Twitter, you're getting so many people's opinions. So you can take everything and then just go and sit down and do it. So it's interesting that even you say that that you get a lot of this information on Twitter because you then hear it from different views. It's like unfiltered. So, yes, absolutely.
Exactly.
So, I mean, we've literally come to the end of all the questions that I had gotten from questions people have asked about equity, questions that I've seen people have concerns about, and all of that. Now, if you were going to say something to someone who is maybe watching this video or struggling and saying, I want to invest and I don't have enough money, I'm considering equities. I mean, what would you say? So you have like a minute or two to just say something to that person.
In all honest truth, I'll tell the person to go check out GetEquity. Check out the deals that are there. We have across different risk thresholds, and across different, asset types. I think, in my opinion, I could be biased, but in my opinion, right, we're literally writing the roadmap for reduced threshold access to multiple investment deals across board. So check it out, try it out yourself, see if that's something that works for you, and let me know or thank me later. Send me a bottle of whiskey.
Right, like thank you later with a bottle of whiskey. That's interesting. Okay, so if people wanted to keep in touch with you or with Get Equity, I mean, where can they find you? So where can they find you? And then Get Equity, where do they have to look to be able to find Get Equity?
I mean, I'm very much active on Twitter, like I said before, at Big Brother, BIGBRUTHA_. My company GetEquity, you can reach us anywhere from support at GetEquity.io. You can also reach us on Twitter as well. I think we're on every social media platform at GetEquity.
Yes.
Reach out to us. I mean, we'll be very, very, very happy to have conversations.
Thank you so very much, Jude. I appreciate the time. I appreciate the insights and all the information that you've shared today. I know that it has been a discussion between us, but I have also gotten a few tips and a few pointers to say, okay, this is right, this is where we're at. And I look forward to doing more business with you as GetEquity and even as yourself. So we're going to come and talk about that, your 30%. So just know I'm coming.
Not a problem.
Yes.
Not a problem.
Yes. All right, people. So you've heard from Jude. Thank you so very much for watching. You can find Jude at his own handle on Twitter, or you can just follow the GetEquity company. I'm going to leave all the handles in the caption down below. If you have any other questions about equity investing as you would like us to be able to address, please drop them below in the caption so that we can pick them and have Jude respond to them. And then we'll just keep it going from there. Till next time with another episode. It's bye for now.